The company reported a mixed fiscal second quarter earnings report after the bell last night. Earnings were above expectations, but revenue was a slight miss, a surprise decline in the sales of iPhone. Wait on the results. Joining us right now is Regent Atlantic Chief Executive Officer, Chief Investment Officer, Chris Cordero, with $3.5 billion in assets under management. Chris, you own Apple.
Yes, I do.
What did you think of the quarter?
It was okay, just okay. So, the iPhone sales being roughly flat, that's the tough part of the market, right? Because Apple is really an iPhone company. That's about 2/3 of their revenue is coming off of iPhone. So when their sales are flat and they can't increase prices, growth isn't there.
Yeah, one of the biggest issues I see from this report is that their international sales, that's where they need to grow. I mean, they actually operate in duopoly. You're either going to have an Android or an iOS, and they're not growing that iOS, especially internationally. China, India, they're trying to focus on it. They've said it for years and years and years. They're not delivering. They're actually losing traction over there. Do you think there's anything they can do to address that? And is that what will move the stock from their current multiple?
Yeah, so that's a great point. I mean, what they're saying is that everybody's waiting for the upgrade, right? So there's all these delayed purchases. But the big risk in Apple is, what if we get out into September and you've got the new version of the iPhone coming out and it doesn't gain enough traction? You know, they're the premium priced one, right? So you get into the emerging market world, and there, if you've got an iPhone, you've got a luxury brand. You know, that's somebody's identity if they have that. So can they still keep trading on that? If they can, they'll do relatively well. But if they lose their brand, if they lose that premium pricing in the brand, that's where they're going to be in trouble.
Yeah, but I like what you said in terms of the valuation. Strip out the cash, right? What is it, $250 million in cash at Apple?
Billion.
Billion. Strip out nearly
all of a sudden it's real money.
$250 billion. That's incredible. Strip out that $250 billion, and the stock is only trading at 10 times earnings?
Yes, and that's what I see, Maria, is like, think about Apple as like one of these boxers, these heavyweight boxers that shows up all of a sudden 20 pounds lighter, right? So if Apple could show up 20 pounds lighter, shed its cash, it is really a great value stock, and I think they've got that opportunity if we get a foreign tax
historically,
holiday.
It's been that way. It's consistently traded at this multiple, and they've consistently had this cash, and it hasn't moved because they haven't done what they've needed to do, and that's whether invest in Hulu when they could have got easy content when that went up for sale, the small portion, whether it's buying ARM holdings like SoftBank did to get the blueprints for the next wave.
Well,
the cash
Hulu wouldn't have been a good acquisition because they didn't have that much original content. If they want to spend some of that money, they should go out and
it would have been their foothold in to get the future content and make deals with the studios.
But Hulu's not a content producer. It's not like Netflix. It's an aggregator, just like iTunes, for video content. That would not have been
But you own it with the studios, and what are they having now? Apple TV hasn't worked out, right? There's no car. There's nothing to move the needle.
More revenue now is that their whole service business. They've got so many people who are Apple and Mac users that they're now getting to get an increasing portion. A bit like their razor blades, right? They're selling all of their apps, and that's where you're seeing some of their revenue.
That was the bright spot in the earnings announcement. Is they have this 18% increase in their service revenues, which is great because they've got to diversify somewhat. They can't all be iPhone. I mean, you think about the largest company in the world, and 2/3 of it is made up of iPhones. That's crazy, isn't it?
Real quick, you got to tell us about Facebook. Company reports earnings after the close tonight. Would you put money to new work?
It's so expensive right now. They could crush it with earnings, and I won't put money into it because it's just too highly priced.
I think it's cheap. I mean, Instagram's growing on their mobile platform, getting daily users. I mean, at 26 times earnings, and they're growing it at 30%. That's cheap, in my opinion. That's growth at a reasonable price, but that's that's convicted in the market.
One thing we know about Facebook is that they deliver what they say they're going to deliver, and they do an excellent job of managing expectations. So I think we will see slower growth, but it will still be extraordinary growth.
Great company, but still too highly priced for me.
So you're really looking for value out there. Where else is the value in this market after, what, a 15% run-up since Election Day, 14%?
I think financials, as regulation decreases and as rates rise, I think you're going to see the big money center banks do really well.
All right, we'll leave it there. Chris, thanks for your insight.
Thank you.
Appreciate it very much. Chris Cordero there.